You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That rockin' tune means it's time to rock out with our final program here on our broadcast week for the old network. It is time for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was, and in many cases still is, from a futures options trading and trending and analysis and volatility and skew and unusual activity and all that good stuff perspectives here. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a little bit different, it's because I'm still coming to you for one final week here from the Southern studio. So hopefully the rain gods smile upon us. They weren't smiling upon us for vol views earlier. So hopefully everything stays working here through TWIFO, you guys can get access to the chat and the live stream and listen to everything, and everything stays live because you never know. Apparently, it's storm season down here because it has not stopped raining pretty much every time I turn on the microphone down here. The skies open up. So we'll see. But we'll be back in the studio next week for more fun talking of all things futures options. Of course, you guys can join us as always via Mixlr, MIXLR, every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, or get the podcast wherever you get your favorite podcasts, your iTunes, your Google Podcasts, your Pocket Cast, whatever you use. Grab it on our website. Grab our mobile app over there as well. I think we had to resubmit it for some updates, but it should be back in the stores now. If you weren't able to get it, you can head over there and get it there yourself. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes indeed we do, like to hear from you guys. And joining me on the old program today, my cohorts, my partner in crime, the yin to my futures options and yang, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little program we like to use around here called Quick Strike. Mr. Nick, welcome back to the show, sir.
Hey, it's good to be back, I think, and nice Friday here in Chicago, so let's get this party started so we can all get outside.
Well, at least it's nice there. Not too nice here, but at least it's nice up there. So, I went south to try to get some warmer weather, and what do we get? We got not so much. Should have stayed north, I guess, is the moral of the story. Speaking of going north, Mr. Nick, we got to start things off in the black gold, the Texas tea, sir. It was quite the week for all of our crude fans out there. Just continued to explode northward. By the way, you guys can follow along with everything Nick and I are talking about here. CMEgroup.com/TWIFO, TWIFO. You guys can get the live reports and everything else we're talking about here throughout the show, so you can see exactly what numbers we're talking about. And crude end up the week up about 5.5 handles, right around the 74 level. So quite an impressive rally from even a week ago here on the old show. Remember last week we were talking about, crude and, we'll be able to continue and maintain above the 70 handle and support above that. And not only does it stay up there, it breaks through it, but it stays and rallies even harder. That's our highest, pretty much right around our highest finish since November 2014. So it's been a while since we've seen these lofty, rarefied levels out here in WTI. In case you're wondering, that's a little over 8% for the week, 11% for the month, about 16% for the quarter, 25% for the first half of 2018 if you're out there playing in WTI. So not a bad little run. Of course, a lot of this has been driven by all the concerns coming out of Libya, compiled with all the back and forth with OPEC and whether they will increase production or reduce production and who will be able to take part in that and to what degree. Of course, Venezuela and Iran also contributing to all of that as well. Trump saying earlier that the White House is going to sanction countries that we're not going to reduce their imports of Iranian crude. All of this combining for a nice 1-2 punch out there. If that wasn't enough, we had data coming out here showing the overall declining levels of oil inventories and indeed rising demand for crude. So all of that combining for a nice 1-2-3 punch to really drive crude to the upside this week. And like we mentioned, go ahead on over to cmegroup.com/TWIFO. You can see the reports for yourself. You can see what's been going on out here in the vol side of crude as well. I'll let Nick get back into that in a little bit of a mixed bag on the vol side. I'll let him break that more down in a little bit more in a little bit in terms of what was driving the action out here. Well, first off, OI was another pretty strong week out here in WTI, up about 5% net OI on the week. So a pretty active week out here, as you would expect in all things WTI. If you're wondering where the action was this week, it was in the AUG expiration cycle. That's where almost half, 49.8% of all the paper going up this week went up there in the AUG expiration cycle. And of that, it was indeed the 75 calls that took our top spot this week. Number one with a bullet, doing 28, nearly 29,000 contracts. The lion's share coming on Wednesday, nearly 11,000 hitting the tape on Wednesday, 7,500 on Tuesday. The rest kind of scattered throughout the week, about 1,800 net closing on the week. So that kind of shows just how active, how much back and forth there was on that 75 call strike. If that's a little bit too close to add the money for your comfort, you want to get a little bit farther out, number 2 will resonate with you. The 80 calls also out there in AUG, 20,000 and change going up this week, about 8,000. 8,300 actually going up on Wednesday. So Wednesday, yet again, the big mover. The rest, again, kind of scattered throughout the week. 4,300 going up today, so pretty active out there today as well. About 2,300 contracts net opening over there. Then we're kind of pretty much keeping it all here in the same expiration cycle to the 865 puts, doing almost 20,000 there as well, 19.8 going up there. Again, the lion's share coming on Wednesday, pretty close on Tuesday as well, 5,800 on Wednesday, 5,700 on Tuesday. The rest, again, kind of scattered throughout the week. Again, about 1,100 openings, so a lot of back and forth, 65 puts, 75 calls, a lot of back and forth action on both of those strikes. So we drop off a little bit again, 70 puts, 17,000 and change going up. The lion's share actually today, 6,300, 3,400 net opening, but again, we don't have the numbers for today, so today's a little less than a third actually going up today, so that could skew those OI numbers a little bit again. Around our top 5, again, pretty much all right here in front of us in the same month here. The 68 puts, a nice little put strip there, doing 16,000, about 600 contracts. The lion's share coming on Wednesday, 5,400, followed by Tuesday, 5,100. Total about 3,200 contracts opening out there. Then, as we are wont to do, let's scan around a little bit here in the old quick strike to see what else we see that's going up that may be interesting, exotic, or sometimes just downright weird. You never know when you scan some of these farther off months, listeners, exactly what's going up. Well, if DEES 2021 is on your radar, someone putting up 1,000 of the 32 half puts this week, so on Tuesday, actually. So someone apparently perhaps not buying what the market is selling, at least right now, preparing for a long-term fade, or perhaps hedging against a very, very long-term DEES 2021 32 half puts out there in all things WTI. Any other weird strikes? Let's see really quickly. 75 is pretty active across the board here. Double puts, 65 puts. Nothing else too exotic. Let's move on from the exotic stuff. Mr. Nick here, I know you've been watching Crude a lot this week. What's been catching your eye out here from a volatility, from a skew perspective in the black gold, sir?
Well, I think first off, I'd like to acknowledge that last week I said that we would probably not go any higher, and we are higher. So I like to come clean with my predictions.
That's the kiss of death, isn't it?
Well, I'm not Gartman or anything like that, but just letting people know that I remember what I say and I own up to what I say. I didn't think vol would do anything, and vol's really not doing anything this week. I mean, we have a little bit of a bid in some of the deferred contracts, but August, it's 18 days to expiration now, and didn't catch a bid at all, even with this move up, which if you were owning any of it, you more than likely did pretty well on that move. But if you look at the vol curves and what they look like in comparison to last Friday, you're basically seeing a shift down and a slide over. So, the August did lose some actual volatility, and it just sort of kept, I don't know if it necessarily, it kept its shape, but I think what we're seeing now is a shape that's a little bit more consistent with the expectation that it's any directions ball game at this point, because when we see what happened last week, the puts were bid and the calls were offered, and this week it's pretty flat, where the puts are a little bit bid and the calls are either a little bit bid or flat to the money. So maybe we've run out of steam here a little bit on this upside. I think the bigger news here with the WTI price increase is the fact that it moved tighter with the Brent. So we probably saw something in the $11 range at some point not too long ago, 2-3 weeks ago, and now we're around $4.50 or $5. So, when we start to push up against that, it would seem to me that we don't have much room for upside. We talked about zero strikes trading in that in the calendar spread options a while back, when there was the initial talk of taxing and tariffs and stuff like that early on in the administration that we currently have in this United States, which I won't mention by name. And so, that's probably news in and of itself, the fact that we've tightened that spread quite a bit. But from from we definitely got a much firmer bid in the calls this week with the short dated stuff, all the way out probably all the way out like 6 months. So we did catch a bid in the calls. Puts kind of stayed firmer further out. Got a little bit softer in these 20, 50, and 80-day ranges. But, we didn't see, again, the same thing we always talk about. You're trading in a range, and you're kind of back within where maybe on the higher part of a range that we've talked about, but we're still kind of rangy. We haven't gotten any big breakouts at this point. I still think the market's up a little bit more than people expected. Probably, I know that I was talking to a couple of my market maker friends, and they were talking about how big the wings were, but and I joked around and said sold on the bid wings. I don't know if that works or doesn't work at this point, but it would seem like we're probably again, I'm wrong most of the time, but it would seem like we probably petered out, especially as we butt up against Brent, because that spread, we got to see a rally there as well in order to see this to keep going if we're going to keep the distance between these two products. Other than that, what do we got? I don't see anything really other than kind of getting a balanced vol curve, which tends to make me think that it's, like I said earlier, it's any directions ball game at this point, to see which way this market goes. And I would imagine if we come off these highs back to the 70, around the lower 70s or through 70, we're going to see vol come in quite a bit. So with vol not up with this move, you made money owning it more than likely. It's still not that good of a bid. And if we come off this, then I think that vol's going to see some trouble.
Speaking of vol, let's move on to the equity arena. It's been a tumultuous week for all things equity. Most people, myself included, thought coming into this week we'd see a nice gradual tapering off of volatility as we headed into next week's truncated holiday trading week. And then, of course, we saw some errant tweets sending the markets into a bit of a tizzy earlier this week. Vol shooting up across the board before kind of plateauing and coming off here in the latter portion of the week. Our old friends Russell, by the way, our friend Sean over there at Russell traveling this week, so we won't have him joining us on the show here. But the Russell closing out here right around 16 double or so, coming into the show off about 35 handles net on the week. So it shows you a bit of what a tumultuous week it was out there in Russell 2000 land. Again, we said before, Russell 2000 not exactly prone to all the moving and shaking that's going on when the big macro trends that tend to move the large caps in terms of currencies and trade wars. Those things tend to hit the large caps more than the small caps, but the small caps are not completely immune from these large waves that are shaking the rest of the market. So we saw that playing out there in Russell this week. Vol net up across the board. It was much lower last week, so catching a little bit of a bid depending on kind of where you're looking on the futures term structure, up anywhere from about 0.5 point to over a handle in some regions out there. Net, another good strong week for Russell OI, about 25% increase on the options. By the way, last week we talked about on the show, it was the big Reconstitution Day on Friday. It's kind of the big day of the year for Sean and his team are probably recovering still from all of that last week. That's, of course, the day when they reshuffle. They rejigger all of that Russell 3000, break it down to the 2000 and the 1000, of course. And pretty much it's a pretty big day for the markets as well. In 5 of the last 6 years, that Reconstitution Day has ranked in the 10 busiest trading sessions. This past Friday was no exception. Remember last week on the show, listeners, we said we wouldn't know until pretty much right around the close exactly what was going to go up. And now looking back on it, it was yet another record day here on Friday. This year's changes contributed about 10 billion share push volume on all the exchanges, I should say, above 10 billion shares. The average so far for this year is right around 7.2 billion. So Friday, clearly a very active day, as we expected. But you never know until the close comes and all that rebalancing hits. By the way, the weird thing about this is all this rebalancing, it doesn't really move the index too much. The only time that we saw a big move out there in conjunction with the rebalancing was back in 2016, which happened to unfortunately coincide with Brexit. So I think we can think which of those two was actually moving the index. The index actually rose 0.2% on Friday in the wake of the rebalancing. So a lot of action out there as we expected, but now we have some numbers to put to the actual rebalancing out there. In terms of the vol out there, RVX about a half a handle higher, Russell VIX than where it was last week, even though we're seeing VIX a little bit higher, obviously, than it was. We're much higher than it was last week out here as well. So interesting stuff out here on the vol front. In terms of the options, what was lighting it up out here in Russell 2000 land? Number one with the bullet. Once again, the lion's share of the activity coming in the weeklies, but it's a much more even spread than we're seeing even in something like WTI, which does half of its paper in pretty much one expiration cycle. We're seeing the week 3 contract out here doing about 21%. Again, the futures, are the index, I should say, coming in right around 16 double, kicking off the show. We saw the 1680s kind of lighting it up, 1670s in the week 2 contract out there as well. So kind of pretty much as you'd expect, a near term at the money, slightly out of the money calls dominating the action. There are some of you scanning, again, cmegroup.com/TWIFO to follow along for yourselves. There are some aberrant strikes, 1075 puts going out there in Dece of this year. So there are some weirder out of the money trades going on, not for huge size, but enough to pay attention to out here. Nick, it's been an interesting week for equities. I know that we've been talking equities more on the show now, so that's kind of been pulling you to the dark side of following equity vol a little bit more. Anything catching your eye out there from a skew or volatility perspective, sir?
No, I don't think there's much change here. Again, we have to remind people that the weeklies are more than likely have taken the place of the serial contracts. Like when you see the R3s, those are probably the old serial contracts that were the April, Mays, and June, the April, Mays, the July, August, those kind of things. So that's why we're going to see a lot of big volume and open interest swings on those as well. As far as the skews changing or anything like that, I'm not seeing too much here. There's not a great deal of volume happening this week in there. I mean, we're only looking at like 12 or 13,000, and I'm just surprised. I would just think that should be a lot higher. It doesn't. Maybe there's not. Maybe people are still watching it, but the futures move around enough, and you would think that there'd be some interest there. But it's surprising to me because I just would think people will be looking for things to trade, but maybe we just don't have the market makers out there that we need. I'll have to take a look at the bid-ask spread and see if there's anything interesting there. But as far as vol goes, not much of a difference. Calls didn't change their place. They're still offered. I mean, we're going to see that investment skew in these all the time. So that's why that's really not really, as much as we have to talk about the indexes now, I'm really not. I think the interesting part of the indexes is the magnitude of the movement and what caused the movement, whether it was in the 500, whether it was a couple big stocks that had bad days or big days, but there's nothing. The skew doesn't change. The thing slides along on a horizontal path, and the skew's generally there. And every once in a while, we can look at it, and the channel will tighten on the quick skew. But from a fun like talking about volatility thing, I think that we probably don't ever have too much that's exciting there, and we probably are better served to maybe look at those strikes on the upside or the downside from where the future might have come or gone, and start talking about maybe some opportunities from a positional standpoint as opposed to volatility, because it really doesn't seem like there's much exciting here or much that we're really going to benefit talking about from a vol standpoint. Sliding vol curve.
Yeah, that's pretty much the case for most big equity indices. They're going to have investment skew. It's a question of degree. It's a question of slope out there. That's why I think for the interesting, you're right, the opportunities are when we're seeing large displacements, large discrepancies between, let's say, E-mini S&P and, of course, the E-mini Russell 2000. When sees the skews start lining up differently, we're seeing big movements, big displacements, disjointment. That's when we see a lot of trading going back and forth and a lot of interesting spreading opportunities as well. So far this week, we haven't really seen that line up. Not a lot of disjointed action. We'll get Sean back on next week. He can break down exactly what they're seeing out there, what they're hearing from a customer perspective, and maybe get some insight into what we can expect going forward for some of the vol areas like the RVX, products, which I know a lot of us are out there hoping, fingers crossed, to see that one really come back to life. It was, of course, the vol product in the Russell space. So for all of you out there, I know there are a lot of you out there who like something a little bit more volatile. And again, small caps structurally going to be more volatile than large caps. Then, that's a product I know a lot of you are interested in hopefully seeing make a comeback, and hopefully we'll see it here even on the show coming up soon. In the meantime, let's move on to another category we've been talking about a lot, Nick, recently, and it's kind of as a result of, again, this back and forth trade war going on. It hits a lot of different areas of the market. It hits, of course, the broad indices. It hits, of course, a lot of the raw commodities, and it hits the ags, because as we're looking at putting tariffs on China and them vice versa, it's going to hit a lot of our exports to them, including soybeans. China is pretty much the largest importer of soybeans for our products. So if they're going to get dropped off the board or knocked off or taxed, that's going to hit the product. And that's exactly what we've been seeing. In fact, since about a month ago or so, maybe a little less actually, when we had the Acuna guys on doing a nice deep dive into the ags. If you guys remember at the time, listeners, we were talking with the soybeans right around the par level, right around the 1,000 level. And since then, it's kind of been just a straight drop to the downside. The beans finishing off another 30 handles this week, right around the 870 level to round out the week. So just for all the bulls out there on the ag front, this has not been yet another down week for you guys, unfortunately. Seeing vol continue to pop up there in kind of different areas across the board, more so in the front portion of the curve, as we continue to see uncertainty, maybe a little fatigue starting to set in finally on this endless downside. Also some talk of maybe some customers seeing how beans getting beaten down here versus some other markets, maybe starting to shift some of their business here because it's just attractive from a price level. So maybe that'll start to put a little bit of a floor here in these this continued protracted beating that the soybeans are taking. Overall, though, it's been good from a volume perspective, up about 7% for the OI over here in the beans options. Yet again, this week, we talked about it before with how these ags kind of have their own rules of engagement. We see that yet again with where they trade. They usually trade around that planting and kind of harvesting cycle. That's where we see the options liquidity mostly concentrated, and we're seeing that yet again here with the NOV contract doing just slightly less than half, about 45% of all the paper going up this week. By the way, net, again, like I said, net OI up about 7%, so a strong week for the beans, and we closed out right around 870. So if you said to yourself, it's going to be the NOV 1200 call, it's our number one trade of the week out here in the beans options. I'd be surprised at your degree of accuracy, and B, you'd be correct. It was indeed the 1200 calls out there in NOV that dominated the tape this week, doing about 19,000 contracts. The lion's share actually on Monday, about 5,000, almost 5,000 hit the tape on Thursday as well. The rest kind of scattered throughout the week. So an interesting strike. I would not have guessed that coming in. Net closing about 4,000. So people maybe perhaps finally giving up the ghost up there on the 1200, saying maybe we're not heading back to that level any time soon. And really, who can blame them given what we're seeing out here in the broad futures trend? Number two, a little bit farther south, but not too much. The 1100s also out there in NOV doing about 16,000 and change. Again, the lion's share coming on Monday, about 6,000 lighting it up. So over a third of the paper going up on Monday. Again, the rest scattered throughout the week. About 1,700 contracts net opening on the week. So maybe a little bit repositioning from the 1,200s down to the 1,100s, perhaps to a little bit more reasonable, less optimistic strike out there. Then we scroll down yet again, the pars, the 1,000 calls also doing about 11,700, taking up the number 3 spot here. Lion's share again on Monday, about 4,600. Net opening about 2,300 contracts up there. Then we jump around a little bit again. Let's head over to the 1040 calls, also in NOV, doing about 9,000 contracts. 3,600 going up on Monday, about a third, slightly closing, about almost 1,000 biased to the closing here on these 1040. So a little bit closer to quote unquote at the money out here. And I think we got number 5 out here going to go to the dark side for the puts, the 900 puts out there, which are far more reasonable, slightly in the money call puts than we saw on those 1,200 calls, doing about 8,000 contracts this week. The lion's share actually today, about 3,000 contracts going up today or close to it. Net opening on the week about 1,300 contracts, but again, we don't have the info for today's action out here. So pretty much all in the NOV, and strikes kind of across the board. Perhaps not what you'd expect given the broad price action out there in soybeans. These are not the options perhaps you'd expect. But again, that's why we like to talk about the ags, because they're a little bit of a special beast, a special use case. Just looking around a little bit to see if we can find one more out here that's some aberrant strikes that may have lit it up. Well, looks like AUG also getting a little bit of action out here to the AUG. What do we got here? AUG 840 puts doing about 8,300. Actually, would put it in the spitting distance of our top 5 there as well. Also worth noting, we saw out here the par calls out here in September, also doing a decent amount of paper, doing about 6,700 calls out there. So a little bit of a mixed bag out there. All sorts of weird strikes and different things lighting it up out here. Mr. Nick, I know I've been watching beans for a while. I think we're at risk of turning you into a bit of an ag head here on the show. But what was catching your eye out here from a vol and from a skew perspective in the beans this week, sir?
Well, I think, what's interesting when you get these moves in certain products, you get the whole shift in the volatility curve. And then in other products, you get the short-term change in the term structure, the way the vol looks. And in the beans, you see you see like somebody picked the jump rope up off the ground and picked the end way up in the air. We get the August contract is up almost 6%, and everything else is pretty much flat. So, it's one of those things where people are going to kind of act upon the movement that we're getting right now, but really not doing much in terms of action outside of those first couple months. And we're looking more like the August has 28 days to expiration, started out with 34 or whatever last week, whatever it was. And so that's still got a good amount of time. And the September had 60. So, and the September really didn't do much this week. So, we did have a shift. We had looking at the vol curves from this week to last week, if you plot the delta curves on top of each other, you are basically seeing where the calls got bid and the puts got offered, just like the quick skew says, but it's pretty much just like somebody had a straight bar switch and just cranked it down on the left and up on the right. So not a lot of change in the look other than the tilting of the curve. And really, I guess a little bit surprised that the September didn't see much of a bid, given the fact that that's the second highest open interest of these bean contracts. And I just would, again, being from another market, you expect to see certain things happen, but you learn on these commodity markets or the beans, the ags or the crude, you may get a bigger immediate tilt up in the term structure, and you see that in the rates too. But a lot of times, if it's a longer term, this tells me that it's not necessarily a longer term volatility move, but more of price action against movement in the underlying. That's not going to happen. Not going to be continual or not push itself out on the vol term structure. So nothing really changing too much, except that firmness in the calls and a little bit of offering in the puts. And again, you got to believe that some people are thinking, because we're on the lows of beans in general from a recent history standpoint, that people might be expecting us not to go much lower. So there is some downside pressure on the option premium. Now there are people selling it thinking that they have selling it and hedging it, thinking it can't go much lower and that you'll make your money or you'll cover yourself fairly easily. So nothing too crazy on the quick skew, but it is interesting to look at those vol curves and sort of how they just pivoted around at the money, more so than a lot of times you'll see a shift or a change in the shape. This one was really like, almost feels like a straight line that just kind of got tilted back and forth. Other than that, I don't see anything that is out of the ordinary. I mean, the people that know the markets have to be either really, really excited with the movement or really, really upset with the movement. So it's going to be, it's one of those things where you see a lot of red, and you would think I would just imagine everybody's kind of happy, except people trading futures. People trading options got to be happy. People trading futures, I would imagine they probably are a little bit sad about what's going on.
Yeah, speaking of sad, I know the gold bugs, another week with another tier for all the gold bugs out there. They need it to go up. They want it to go up. They live for gold to go to the upside, and yet another week where gold finishing off downside off about 15 handles, right about 12 double on the strike level. They're off a little more than one, about 1.3% net on the weekend. Gold vol, we've been saying this for a while, kind of a bit of a mixed bag, up slightly, but it's not one of these ones that's kind of been in the doldrums for a while, and it seems like it just wants to stay in the doldrums for the foreseeable future. Anytime we get any little blip of life, any sign of hope out there in gold volatility, it is snuffed out the next week. So gold buyers have had, vol buyers at least have had a bit of a rough run. You might be able to make it back if you get some aggressive scalping going in out there, but net looking to buy up that premium. And some of you have been writing in saying, hey, when's gold vol going to turn around? Doesn't seem like this week is the week. We'll see. Going out there, net over there on Globex, another active week for gold. Open interest up looks like about 8% out there, with the lion's share of the action, nearly half coming in that. Where are we looking out here? Looking at the AUG contract out here, doing about 44%, like I said, of all the paper. And of that AUG contract, that actually wasn't number one with a bullet, though. It was pretty close. It was a similar strike in both months, but it was indeed the SEP 1300s taking the number one spot this week. So maybe some people surrendering or perhaps piling in. We shall see. Not letting go of that 1300 level. 7,002 of the 1300s going up in September this week. The lion's share actually yesterday, Thursday, 3,000 and change going up then. Net about nearly half of that, or more than half of that actually, opening on the week. About 3,800 contracts opening on the week. So people maybe thinking this little bit of a sell-off here. Overdone. Maybe we're going to get a bit of retracement back to the upside, and that paper reflecting that. Number two, also very similar out there. More interest in that 1300 strike coming out there in the AUG expiration cycle this time. With just a hair behind, 6,800 and change of the 1300s in AUG going up. The lion's share Tuesday with about 2,500 hitting the tape. Net about 1,300 opening on the week. So people clearly not giving up the ghost here this week in AUG or in SEP on the 1300 strike. A lot of those probably the gold bugs who see any sell-off as a buying opportunity out there in all things gold land. Then we're going to go out to the puts here for number two, looking at the 1245 puts out there in August, doing 6,300 contracts out here this week for number two, kind of evenly split between Tuesday with about 2,400 and today with about 2,200 or so out here. So yeah, all the action now turn in to the put side. Again, cmegroup.com/Twifo, or head on over to bantix.com, bantix.com. You can see all the reports out there for yourself. Number three, the 1,200 puts also in AUG, doing about 6,000 contracts this week. About 3,000 going up on Tuesday. So right about half going up on Tuesday. Net about 1,700 closing on the week. So maybe some repositioning going on over there. Pretty much almost exact same number of the 1225 puts going up about 6,000 and change. The lion's share actually going up on Wednesday, 4,100 and change going up. Then net 2,000 opening on the week. And we'll round out our top five here. Again, staying with the puts now. The 1,100 puts, 5,300 with about 2,700 going up on Monday to top it out. Actually, that would be our top six. You got a bonus here on the old Twifo gold rundown. Net closing of about 1,600 on these 1,100 puts in AUG. So interesting stuff out here. Nick, gold's always that product that kind of gives and takes away week after week. And, with so much macro stuff going on, trade policy, dollar moves, interest rates, everything else, all these things tend to move the gold. We saw gold responding this week. Anything catching your eye out here from a gold skew perspective? And are you like me? Have you kind of maybe, I don't want to say washed your hands of gold vol, but maybe not really looking for that pop to happen anytime soon?
Oh, I mean, I don't think I've said it all along. Just because volatility is not high, or it's not going higher, or it's not changing quite a bit, doesn't mean it's a bad trade. I mean, if you go back and look at all the stuff we talked about in terms of, buying cheap puts and hedging them, I think that those things are working because you're getting enough moves in the underlying back and forth where you can, scalp your deltas, and we're really approaching a point now where a lot of this stuff is, we're getting to some lows in the underlying that are, reaching things that we haven't seen in a long time. So again, if you start to push through these things to the points like 1160, which printed, if you go back and look at the futures chart over the last few years, it's not like you're going to sit there, and you don't have to necessarily buy and hold it, but I think you got to pay attention and be ready to buy it, because there's good stuff here. And as just from a general standpoint, anybody who likes to be long the regular precious metals just from a store of value, these are all good levels to buy them. I mean, because you're really at the bottom end of a range that we've seen, that we've been watching for a long time. But you scaled in purchasing of the precious metal itself can't be bad here. But from a vol standpoint, no, nothing much happened. A little bit of a bid, the $16 move net this week so far, with a little bit of a tick up today. So we'll just call it a straight down move. Vol didn't do anything, probably sit along. So I don't see it getting depressed that much more. That's why I picking your right spot in terms of expiration is probably not a bad. I still like it. I'm a low vol buying guy. I'm a low vol delta hedge buying guy. I always think I will be, and I think there's going to be plenty of opportunity here. I mean, we've seen the moves in these things. We've seen $40 moves in a day. We see $15 this week, right? We can see a $25 move up Monday, when if you bought and hedged something in 25, 30 delta range, you get your money back, or a majority of it back pretty quickly. So I like gold vol. So I haven't lost. I think gold hasn't lost its luster. I think it's like anything. I think you got to scale it in. If you're a precious metals purchaser, you scale it in at these prices, and then if you're a gold watcher, you just have to maybe pick some longer dated stuff where you can get some cheap calls or cheap puts, hedge them up, and just wait and see what happens, because I think it's got to come out of the doldrums at some point. But vol standpoint, not much change. A little bit cheaper calls, a little bit cheaper puts. So almost like we got a little bit less cheap puts. So a little bit of a tilt there again, but nothing spectacular. Great volume in the options, like you said, almost 8% up in the open interest. August up 10%, SEP up 10%. So can't complain from that standpoint. So there are people obviously trading it. Wait and see what happens, though.
You know who's complaining right now, Nick, are the crypto heads. They're still unhappy as we do another run through some of the other products that are lighting it up over there in CME land this week, and the Bitcoin futures also lighting it up to the dark side yet again, off 200 handles again today, so shy of the 6,000 level, 58.90 in that front month June contract. Doing decent paper. Actually, most of the paper going up in July right now, with about 2,300 contracts going up over there. So again, that's a 5x multiple. So you're talking over 10,000 quote-unquote coin contracts going up over there on the future. So a fairly active day, all things considered. Speaking of activity, let's head on over to the Quick Strike machine, and let's see what the big movers and shakers were in CME for the week, the big products that were lighting it up. Again, you can do it yourself if you have access to the full suite of Quick Strike tools, Bantix.com if you don't, and then you too can click around to see what's going on for the week. Like here, again, this is just futures. This is not talking the options vol. This is not talking open interest, anything like that. Just straight up futures movements. And number one with a bullet this week is the rough rice, about nearly 6% to the upside, followed by good old RBOB, up about 4.6%. Heating oil, up about 3.5%. Oats, up a little bit shy of 3%. And then rounding our top five here, lumber, just shy of 2%, 1.83%. Then we go to the dark side here. We got KC wheat off about 3.5%. Soybean meal, similar numbers, off nearly 3.5% as well. Followed by copper, about 2.6% to the downside. And then what do we got here? Silver with about 2.3% off, followed lastly, it looks like by the New Zealand dollar, US dollar, off a little over 2% to the downside. That's your top five to the downside. Nick, anything surprising you or catching your eye out there in these movers and shakers, or indeed are you still paying attention to the crypto? Anything catching your eye in the crypto land out there this week, sir?
The crypto is still obviously paying attention. I mean, I kind of like that it's the luster is off of that a little bit, because I think it was a typical sort of crazed approach to it in the first place, because there's nothing does parabolic movement up forever and ever, right? Unless you shoot it up and it goes up into orbit and then it just rotates around the Earth. So that eventually had to be a problem, but for the people who are going to stay along all the time. But I think it's good to see this get shaken out a little bit. Like I said last week, I think I said week before, when it approaches sort of a steady state, I think it makes it more useful as a actual type of currency for exchange of trade. So I don't necessarily see that as being a bad thing. And maybe this kind of stuff is good, right? You shake out all the like novice speculators in a situation like this, and that's why CME came on board to sort of dampen that. The CME and the CBOE came on board with the futures to sort of dampen that, projectile rocketing into the sky as we went to 20,000. But then now you've seen the big boys come in, they're setting stuff up. You're just quietly seeing those things take place, and eventually, when they all start trading it, it's just going to be another instrument that people are trading in. I don't think you're going to see the craziness, because people are just going to knock it down every time it goes nuts. So, so I'd still pay attention, still a holder, still like Ripple the best out of all of them. And I think there's a few small ones out there if people want to speculate for pennies per coin, probably worth it too. Make sure it's your fund money and not your retirement money, though. That's all I have to say.
Well, let's see what our people out there have to say with a little bit of their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback segment. The man said it all is the portion of the show where you guys get to sound off questions, comments, insights. It's also the part of the show where sometimes we make Nick play the guessing game. We're going to do that again this week. Nick, we asked our listeners this week, Nick, we said, Crude's been on a tear. A lot of you out there are slinging options on Crude, so we want to know, quite simply, what products are you using to slake your thirst for Crude out here this week? Gave you a bunch of different choices. WTI, obviously, up there on the list. Good old USO out there as well. Maybe a little XLE, or gave you some choices of other with some interesting ideas coming in there. Mr. Nick, I know how you're going to vote, so you don't need to vote for yourself unless you want to shout out WTI, but you can. But what do you think, more importantly, what do you think our audience is voting for, sir?
Obviously, it's probably the USO. I just don't think that WTI is the retail people are ready for the WTI, so probably the USO.
Actually, you'd be surprised. It's been a hot and heavy contest out here this week, and it was tied going into the show at about 38% apiece for WTI and USO. And as the show has progressed, we saw WTI pulling ahead. So as of right now, WTI winning with 39%, USO number 2 with 35%, other taking 17%, and then XLE bringing up the rear with 9%. I was looking forward to some of your esoteric suggestions for how you like to sling some Crude options.
How many votes? How many votes?
I haven't had a chance to. I don't know. I have the percentages here, but it looks like it's only been up for a couple hours, so we got to give it time to circulate. But so far here, WTI still in the top category. All right, let's see what else we got here. Oh, we got an interesting exchange from you. I think this started off with our friend Shy Girl, Mr. Nick. coming last week, who we had on the show not that long ago, who we talked to her about the weekly. So I was surprised. She was surprised. But she mentioned, they said it has been brought to her attention. People do not know that there are weekly options on WTI. Again, a problem we've discussed many times. You chimed in saying to her that we've been talking about weeklies many times on the TWIFO podcast for pretty much as long as you can remember. And you guys have all the info. And we've said many times here on the show that we probably think it's something logistical, something behind the scenes that's preventing people from actually using these. And one of our regular listeners, Olivetrader2 I, chimed in with his thoughts, which may be kind of revealing on this, Nick. He said he thinks he has the key to the weeklies mysteries, or maybe he's Captain Obvious. He says, if I want to trade the weeklies, I need to ask for weeklies options limits to my clearing firm. Regular options limits don't apply. He says he uses trading technologies. He says, I never asked for them because his trading results are usually not good around expiration, and the weeklies equal more expirations for him, so he never went and asked for them. But that kind of confirms what we've been thinking, Nick, that you need to be proactive. You need to go the extra step to really trade the weeklies, and that's probably why we're not seeing a lot of volume out there. Are you kind of agreeing with what Olive Trader here is saying?
Well, I think the balance of that conversation was included, like somebody from TT that said that they were enabling them pretty soon to be able to do the weekly options just as a regular part of their options trading. So there may be another, the rest of the story, like Paul Harvey used to say, the rest of the story might be that's coming soon without him having to do, or her, Olive Trader, doing too much differently in their account. So no, I think it's a marketing thing. I mean, and I do believe it's the way, depending on what platform they're using, it's also the way you type in and look for the symbols, right? So they may not know what the proper symbols are. I mean, I got to think that most of them are sophisticated enough at this point to show everything to everybody, but maybe it is an entitlement thing. I don't know enough, but I know that TT's probably changing it, and I know CME Direct has made it a lot easier now as well. So so let's see how this conversation goes 6 months from now.
Yeah, that was kind of interesting to see the TT guys responding to that thread as well. So, people are, the conversation is getting out there. The word is getting out that people need to make these a little bit more accessible. But you're right. It does seem like there are still some structural issues in place that are keeping people from slinging all of the weeklies. All right, Leif. Leif wants to know, too bad Sean isn't here, but we'll do our ableist to fill in here. Question from Leif. He wants to know, is the use case for Russell 2000 options the same as S&P and Nasdaq? So primarily covered calls and protective puts. Yeah, I think I can pretty much take this one. That's pretty much the use case for the lion's share of the broad equity indices out there. You're seeing a lot of funds coming in, and what are the funds doing? They're hedging. Their funds are primarily long. They're going to be hedging that exposure with long puts, and they're going to be writing the covered calls to generate income. Hence why we see investment skew across the broad array of most of these broad indices, because that's the use case for the lion's share of the users out there. Of course, there are shorts and other things, people doing more esoteric stuff, but they're not the vast majority. The vast majority are long equity holders, long underlying holders, and they want to generate income off that, and they want to protect it. And that's why we see pretty much the same use case. Now again, it's going to vary. You're going to see the slopes differ between the different skews. So might get puts might get a little bit more bid in the S&P 1 week versus the Russell, or vice versa with the calls. So you see the slope change. That's kind of what Nick was alluding to before with the same regular skew but a different shape. So we'll see the slope change, but in general, the use case is pretty much the same across the board for most of the major indices. Would you concur, Mr. Nick?
Yeah, I mean, we've talked about it. We've seen some of the difference. Maybe you don't get the same kind of the same steepness in the slope, but generally looks the same. That's why I don't think it's that much fun to talk about personally, because you don't see any whipping. It would be super cool if you actually saw calls get bid every once in a while in the equities and puts get offered. It would be great, or if it actually had a smile. But I get it. It's a vehicle for protection of your investment more than anything else. But, makes sense.
Now let's see if this next one makes sense. Tatoof. Got some funky handles this week. They want to know, it looks like Crude is setting up to be a decent candidate for call ratio spreads. And he's talking kind of the the inverse ratio. The usually ratios are, buy one, sell two to finance the long. He's talking about selling one, buying two, kind of the reverse ratios. He said certainly would have worked out well over the past few weeks. Am I just blinded by recency, or does the skew data support this long term? Out of the money calls aren't bid too aggressively in WTI. You're right, they haven't been. This past couple of weeks, a little bit different because we've seen a pop. So you're right. I think you have a little bit of a recency bias in what you're doing out here. I don't know. That's an interesting back test. Maybe I'll have to talk to some of my my back test guys and see if we can run that over the long term to see how that stacks up. You don't say exactly. Usually with these kind of spreads, you're going to do near out of the money, maybe a few percent out of the money on the call, and then buying farther out of the money. So maybe you're talking 5 and then 10 or 15% out of the money. So maybe playing around with those strikes might be interesting to see. Crude certainly has been on a longer term upward trend, but it's been slow, except for the last couple of weeks. I don't know if that's been an interesting setup for that. And again, it's been better than just buying a lot of out of the money premium and watching it erode to nothing. That certainly has not been a great trade either. So that's an interesting idea. I know we talk a lot of that particular spread is very popular, at least it used to be in the volatility space. So a lot of that going up in products like VIX, where that was a great way to kind of manage your exposure at the table until you get the big explosion to the upside. The problem with crude is in last few weeks notwithstanding, we haven't really gotten that big explosion to the upside. VIX, you see it explode to the upside with a relative frequency, a couple of times a year at the very least, and you can kind of count on that. That's why you do that spread. You don't get the same degree of outperformance to the upside in WTI, which makes me kind of wonder on the efficacy of this over the long term. But interesting idea. Nick, kind of a little bit of flipping the script of kind of what we usually get asked here about, different strategies for crude. What are your thoughts on that? Kind of selling one near out of the money call in WTI and then buying two farther out and kind of betting on a pretty aggressive pop there.
I don't know. I think he's kind of, or she is kind of swayed by the recency of the move. I would say to them, send us which ones you think would have been good or are good, and I will plot them in the spread builder and go back in time. I will go back to a day that you think you would put them on. I'll go put them on at that settlement price, and then we'll plot them going forward, and we can see what they look like to see if there's any value there. And we won't hedge them. We'll just do straight up 1x2s, and we'll see what the tea leaves say, because we have the actual data and we can plot those things and compare them against a couple things. So send me something. I always put out there, if you have a question or you want anything, go on Twitter and say, I want to build this at QuickStrike1, QUIKSTRIKE1. I want to build this 1x2 from this day, or however many trades you want. Put it out there, and I'll build them, and then I'll put out the whole analysis tab where you can see what the thing looked like, how the legs moved, how the spread moved, what the vols did for each of the strikes, and what the futures look like. So I think we should just do the acid test, and that'll give you your answer. I tend to think that you're probably better off the other way, 9 times out of 10, but we'll see.
Since you're talking about building stuff and building out data, let's wrap up on this one here from CR Habib, maybe. That's another good handle. CR Habib. Let's go with that. He wants to know, can CME put out straddle runs on the Bitcoin futures contract? That'd be fascinating and quite useful. Obviously, we don't have the options listed on there, but still, Mr. Nick, you guys are doing some interpolated options on there. I think when he means CME, he really means you guys, because you guys are the big tool providers over there at CME. Is that something you guys are thinking about doing? Maybe making like an interpolated straddle run for Bitcoin, sir?
I mean, we certainly can do it off the underlying index, which is essentially the same thing as far as I'm concerned. And I think it's not CR Habib. I think it's Crypto Habib, based on his answer.
Yeah, maybe.
So that would be my expectation. Yeah, again, if you want to see something, I'll put something together for you and show you what there is, and I'll show you how to get access to it. And it would be based on the actual underlying. We're doing volatility on the actual coin indexes and not the futures, but it's all the same thing. But that time will come fairly soon, I would imagine, if they get to the point of announcing options on the futures, we'll put something out there sooner that will let you kind of look at the term structure and see what they look like. I could tell you what they look like now probably, but if you're interested, shoot me a note and I'll be glad to send you something.
There you go. We're going to end up on that one. Crypto Habib, great questions. Everybody keep them coming. Unfortunately, that music means we've come to the end. Amazing how fast an hour flies by here when we're talking all things TWIFO. But before we go, Mr. Nick, you guys are always cooking up cool things in addition to what our listeners always ask you for. So you guys just finished the OPEC watch tool. What else you guys got cooking up in the land of quick strike, sir?
Let's see. We've just been grinding pretty hard here lately. We're trying to get our historical volatility tools ready to go in the next couple of weeks. So you'll see something about that fairly soon if we can get the data in order. Data's not great, but we're working on cleaning it up. And once it's cleaned up, it'll be good. So that's kind of the big announcement is stay tuned for the ability to go back in time quite a bit and to do downloads. You can pay for downloads from anything as simple as 30-day constant maturity at the money volatility to risk reversal butterfly skew, all that kind of stuff. So that's kind of the one to watch right now. And then there'll be probably some tools coming out in this third quarter that we've been working on and holding on to for release. But pretty soon, some good stuff, or some more good stuff, I should say.
There you go. More good stuff. Check it out. Bantix.com. BANTIX.com to learn more. Click on the sign up for Quick Strike link there, and you can be off to the races as well. Of course, our friends over there at FTSE Russell, can't forget about them. FTSERussell.com to learn more about the reconstitution, what they got going on from a rebalancing, who's indexed to what, who's benchmarked to what, all that good stuff. FTSERussell.com to learn more. And, of course, our friends over there at CME Group as well, CMEGroup.com/TWIFO. Check out the reports that we're always talking about here on the show. Maybe head on over to the education arm over there as well, the CME Institute. Some of these questions you guys have for us, they probably have some good answers over there as well. On behalf of Mr. Nick and Sean, who could not make it here this week, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, all the other fun stuff that you did for the hardcores who fought through all the myriad technical challenges to stay listening to us this week. I thank you. We'll be back here next week. We'll be back in the Chicago studio for TWIFO. Looking forward to seeing you more then.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.